Zach's Rank Buys, stocks with a short-term buy or strong buy recommendation. Now, here are more Zach's Rank Buys. Aggressive growth stock time once again. Bill Wilton, our aggressive growth stock strategist, here once again to give us a couple of more of his amazing picks that are on the aggressive growth track. Penn National Gaming is one of them, PENN, owners and operators of gaming and racing facilities.
Yeah, right now they've got 26 locations with 2 more in the pipeline that should be coming up over the next couple years. One thing I really like about the gaming sector is it's almost a bit of a contrarian, but people that like gambling are going to keep doing it no matter what. Also, we're seeing states go to extreme measures to fill budget shortfalls, especially here in Chicago. They're talking about expanding gaming legislation and things like that to include more casinos and other gaming locations. So, a lot of these casino companies are seeing a lot more attention from investors right now. Even if none of that does happen, we're just seeing great results from this company on an individual level. Their last quarterly report was back on July 21st. They saw revenue up 15%, which was about it came in at $688 million, which was $5 million above the top end of their guidance. It was better than analysts were expecting. Their earnings per share almost doubled to 55 cents from 29. And they've got a great earnings track record. They've now beaten in 5 of the last 6 quarters. So we're seeing a lot of analysts, raise their estimates, place their bets on the company, if you will, which has given them pretty good valuations. Shares are trading just under 18 times right now, and that gives them a PEG ratio of 0.7, meaning this potential growth rate that analysts are projecting is coming at a pretty good price. Here you can see why. A lot of it is due to that downturn. But with those higher estimates, they're now expecting 28% growth rate this year, another 10% next year. So higher estimates plus that sell-off is where we're getting huge value. If you've got the stomach for it, this is a great chance to buy on the dip here.
All right, and you also wrote about Cabela's recently, CAB the ticker, that specialty retailer.
Yeah. What they do is they have a lot of outdoor recreational products, hunting, fishing, camping, that kind of thing. They've got a very established catalog business, and they're also growing up their retail brick and mortar locations as well, which saw some pretty good success in the past quarter. They saw revenues rise 8%, and they've now beaten in 8 of the last 9 quarters. So they also have a great track record. And, this is a bit of a contrarian play. A lot of people are expecting consumers to stay away from some retail stocks, as well as staying away from the retailers themselves. But we are seeing some resilience here in Cabela's, probably partially because it is such a niche market that focuses on a specific need here.
Well, I noticed that they specialize in apparel or specialty retail for hunting, fishing, camping, and outdoor activities. So is this a seasonal play?
A lot of people say seasonal. Almost every retailer is seasonal. That's kind of just a given. But, just about any time of the year, they are going to see an influx of customers. You've got people shifting into the fall. We're gearing up for hunting season, so they should be seeing sales now. Toward the spring, you're seeing a lot of the campers come out, the fishermen, things like that. So they've got a good balance of seasonality there. Yeah. But they are prone to those downtimes. Like in the winter, there's a lot less people looking to get outside.
Ice fishing, I guess.
Yeah, but that's going to come with almost any retailer. Definitely not the reason I like them now. But it does play into the stock in general. Right now, we are seeing good valuations. Like the last stock, rising estimates plus a bit of a sell-off. And here we've got a PE ratio of about 10 times with a PEG ratio near 0.8, meaning that growth rate is coming at a great value. And the bottom line is, it's hard to argue with this earnings trend. You can see the sharp year-over-year growth here. You can see the upward estimates throughout the year. Both things are what you want to see in a stock moving forward. And you can see that the prices come off pretty sharply. So like the last one, if you've got the stomach for it, this could be a great buy on the dip opportunity.
All right. Do you own either of these two?
I do not.
Check out other stock pick ideas in each of the investing categories that we write about on Zacks.com on our homepage, because there is where we put 4 new stock pick ideas for you daily. And Bill's category, aggressive growth, is included in that mix. With Bill Wilton, I'm Terry Ruffalo.